Good afternoon. This is Chris Brecher with Brecher Trading, December 29th, the last trading day of the year. I am busy building the website. Couldn't go crazy trading, but it was really exciting seeing a lot of the ledge trades that happened today. I'm not going to go too long into the ledges. I don't want to give way too much to my potential subscribers, but what I'll show you is a great portent of next year. Is basically there haven't been that many ledges for a year unless you pick some of the non-S&P stocks. But today were some that could have made your whole year. I know there are a lot of people that are like, let's load up on some of the cheap stocks for the bounce next year. There were some plays today that could have made your entire month just today. So to let you know that you just had to know where the ledges were, and I'm going to try to help you with some of that in here. Brecher Trading, almost ready. It should be ready by the middle of next week. Very excited about that. Showing me in here. Now I don't have the old picture I had on StockTwits where I look like I'm 20. I mean, I didn't think that was right. Made this look a lot more professional. We have almost everything ready in here. We're going to have morning ideas. Now, right now we have it as text-based, but we might change that around. But for now, morning ideas. Real-time chat room. I'm on at least an hour in the morning, an hour in the afternoon. Very active. I want to encourage an active forum where we can exchange ideas back and forth, because I can't answer specific market-related answers just on a private email. Public forum, I mean, within subscribers is fine. Videos. Nightly videos, learning videos, swing trade videos. I'll do them all in here. I'm very excited about those. That's part of the Learning Center. ATR trailing stop, MACD, how to use StockTwits sentiment. I'll go into those. Special events. I'm going to have like Wednesdays Ask Me Anything at 7 at night. So if you're a premium subscriber, you'll be able to join in on those if you couldn't be on the chat all day. Premium, $97 a month. Basic, $79 a month. Basic just doesn't include the chat archive, the special events. The premium, I'm telling you, we were watching today. There were trades in there that could make your whole year of subscription prices in an hour. It was really incredible, some of the percentage gains in here. Very excited in there. So I want to show you a couple of things that are interesting. We're going to go into the meat and potatoes of the market in here. But I want you to see something with TradingView. This is the DAX. I posted earlier today my some predictions, some crazy predictions for next year. One of them was about the DAX falling apart. That's what I'm going to be watching. But what I'm watching on a shorter term is this arrow right here, this line of support. And guess what? We're under it. So all of a sudden, this little head and shoulders might come to pass, and this could have an air hole all to 12,000 in here. Just unbelievable. We'll finally have some good divergences. I wanted to show you that because I thought it was important. Also, the NASDAQ. And let me show you the NASDAQ on a better way in here. We're going to go over the whole market, and I'm going to show you that when you see the overall market have a ledge in the last hour, you should be trading the overall market. And if that volatility is too high of some of the options that expire in an hour, then take some cheap ones in some of the other stocks. I'll show you that. So we're going to go over here. We're going to go to futures. And I'm going to show you what I'm looking at, what I looked at today. ES is down 14.95. It was the NASDAQ that is so important. How many times have I been mentioning that if the NASDAQ couldn't hold 6450, this ledge right here, it was going to have a quick move down to 6400. Well, guess what? A quick move is an understatement. My goodness, it happened in the same day. But the point was, you got to see this ledge on the right. Look at this sucker right here. That is a bear flag or a ledge. A ledge to me is a more horizontal line. See that right there? That measures 40 points. Guess what? It went down 40 points. Care about direction. Don't care about that, oh, it's down, it can't go down anymore. That's just ridiculous. As you see on the right, this is one of my classic things. I love seeing this. Check out a 1-minute chart. I can't tell you how many times I see a ledge have that little snapback right here, and then it just fell like a rock. The point is, In bear markets, you get chances right here to have the next leg down. Now, let me show you a couple of things with the overall market. One is you have the DAX might be selling off in Germany, and I'm telling you, whatever the DAX does, we eventually do, especially the end of the month. ESs, I've told you before, this could be either a bull flag or a ledge, and it was going to be a ledge if other indexes with similar patterns broke down, not up. I mean, I'm telling you right now, and I'm going to show you on here. We're going to take two charts. And we're going to take on one side the ES, and we'll put it, I could even put it on a 15-minute chart. And on the right, we're going to put the NASDAQ on a 15-minute chart. That's a thing of beauty over here. But what a lot of people didn't see was the NASDAQ already had broken under here. That's an amazing tell. Go and check this out. The NASDAQ had broken this big old ledge much early. I mean, really, when you look at it, the ES didn't break that ledge until 3 o'clock Eastern. But that was a big old tell right there that we weren't going up. There were a lot of people, oh, there's going to be a buy program. I'm telling you, when you see this and you see it under here, we're all the way down here under this ledge, this is not going up on the left. So just keep that in mind. So how would you have traded a lot of this? I know I usually go over Bitcoin and transports. I think you want to see all of this, and that's what I'm going to show you. Number of ways. Number one, when the NASDAQ look lousy, I mean lousy, look at Apple on a 15-minute chart. This looks like garbage. I mean, it looks really lousy on a chart. Now, I took a lot of heat on StockTwits today because I took my MacBook Pro to the Apple store yesterday because it's been having the pinwheel of death. My MacBook, not my iPhone. And the technician said, oh, there was an update, a software update 4 months ago that creates a huge amount of instability in a number of MacBooks. Just coincidence that's before Christmas. So they fixed it for free, but when I'm in the Apple store, because I had to wait forever for the Genius Bar, there were at most 10 people, 20 people buying things. There were 200 in line for service. So, I mean, which really, you know, that tells you something right there. But when I mentioned that I thought Apple is at the minimum going to go fill this gap of 160, and I think going a lot lower. I think it could definitely go down to the trend line, 155, 150 in that area. I got so many hate. There's just so many hate tweets. It's amazing. But let's go into Apple just short term. Right here. I can't tell you on how many people, when it's under there, see that little break? That's right there. And we're going to show you the time on here. That time was at 15:49. See on how it broke the ledge? It then worked off the oversold. This is in the bottom right sextant. I call them quadrants because of everything going on in the world. Quadrant is just a lot more safe for viewing. But on the bottom right thingy, we can just call it thingy. But on the bottom right here, look at this break. Look how it worked off the oversold condition right to the break. Now, you might say, well, where were the puts then? Well, I'll show you. There were two ways to trade Apple, and you could make a boatload of money. This was at 15:48. There were two ways. I'm going to magnify this. You could either just say, darn it, I'm just going to buy these puts right here, or you buy them when it breaks under there. A lot of algorithms buy when it makes a new low. We're going to go to time and sales, and we're going to see right here at two spots, 15:48, where were the 170 puts? And then when it broke right here at 15:51, let's see where they were. Remember, it's the end of the day. You're not going to have a lot of premium in these. Doesn't matter. There's just 10 minutes left. So let me just show you on how this works. Time and sales. We're going to go into here. You have to understand, in our when I do the live chat, I also do a special 3-hour trade the close on expiration. I mean, my goodness, that would pay for everything. I love trading this kind of stuff. I mean, this is what I do for a living. I trade and, sort of teach on the side. Now I have a subscription-based website where I'll be able to trade and teach. It's pretty exciting. But let's go to these puts. We're going to go to today. Just today, the weeklies, because they're the ones without the premium. And we're only going to do the 170s. And we're going to do it chronologically so you get an idea what I'm talking about. So now we're going into time and sales, and I'm going to go down the opposite way. I know this is scrolling a lot, and I apologize. But we're going to go to 1548. 1548. I just want to prove to you there's no premium in it. Remember, at 1548, the stock was 169.91. Just keep that in mind. You can hear the little scroll wheel on my mouse, and I'm sorry about that. There you go, 1548. These suckers were 22 cents. If you buy 10, the worst you're going to lose is 220 buckaroos. That's it. All right, let's see when it started breaking down at 1551. Look at that. They went from 25 cents to 43 cents in 23 seconds. That's why I like to buy them right here. I like to buy them at resistance because the risk reward is just amazing. In fact, I'm incorrect here. Right there, they were 11 cents in the money, trading at 23 cents. That's fine. Great risk reward. Here, when it started falling apart, you might have had a tough time getting them. You had to buy them at the resistance. And it was still under the ATR trailing stop. But those things closed at 85 cents. I mean, pretty impressive in there. Now, the other thing you're going to ask, but what happens if you forget to get out of them? Let's say they widen the market on you. Let's see what the market was on the close. Bid 70, offer 86. Let's say you bought one. Just go and buy 100 shares in the aftermarket and lock in 86 cents. That's what I do in here. But Apple worked well. It worked great. So you might say, well, what were some other ones? The easiest thing to do is when you see a ledge or a bear flag in the overall indexes, especially the NASDAQ, is you go and you scan the NASDAQ stocks. Now you might say, well, wasn't it too late? Well, we already saw it wasn't. Number one, look at this ledge on an hourly. Look at this on how it was under it and it formed a bear flag. Well, my goodness, if the NASDAQ is the worst looking index, go and sort by the NASDAQ stocks. Go to public. Now, I'm not saying you can do all 100, but what I've seen, and this is a really interesting tell. There are two ways to trade this. You can either take the most expensive NASDAQ stocks because they're going to go down the most, or you take the ones that are already near their strike price where you can buy really cheap puts. So let me give you two examples. We went over here. This is public. NASDAQ, it's 100 stocks. You sort them by the most expensive, which is obviously Priceline. Look what Priceline did right here. In the last half hour, went down 6 points. That was pretty impressive. And it was a bear flag. I mean, it was really good on a 15-minute chart. Let's take Amazon. There's another one. Amazon just fell apart at the end of the day. Not as good as you'd want. Just it already was down for the day. So let's take a couple more that I was watching in here. Let me get them up here. I still call it Avago, and I'm sorry about that. That was a wonderful one. There's a ledge already. And then it went down another point. Now, you might say, big deal about a point. I'm telling you right here, 1529. Just keep that on your mind. 1529. Let's go into AVGO because this is pretty cool. See these 260 puts? You didn't trade a lot of them, but they went from $1.50 to $3 pretty darn quick. Right here. Right there, they're $1.69 in the money. And 10 minutes later, they're $2.50. You're making almost 100%. I just love when you see these kind of ledges in there. Facebook, this was a tiny one, but it was a good one. Zoom out of Facebook. Do you see what I see? That's right. There's a trend line for you right there. When it broke right there, you could buy, let's see where they are. 177 and a half. So let's see if they have 177s. I thought it was 177 and a half. Yeah, these were 13 cents at one time during the day, and they closed at $1.30. So, I mean, just, they traded 11,000. These are extremely liquid. Moral of the story, look at this bear flag on a 15-minute. You buy cheap puts when you see the overall market look lousy. Now, if you didn't want to do it that way, sure, you could go buy puts in the QQQ. Let's go show you that. Look at this. Now, the problem with the QQQ, and this is why I hate trading it, is look at this. When it breaks there, that's all at 30 cents. Is it really worth 30 cents? Remember, I'm talking about getting out of the puts at the end of the day. But let's go and see. Right there. The stock's 156.10. Let's see the time. 15:48. Where were the 156 puts? Because I love doing this. I hope you find this as interesting as I do. But remember, I like anything to do with the market. So, okay, we're going to put in the 156 puts real quick. Let me get them up here. Give me a second. There we go. And we're going to do them chronologically again. And hope that you don't have to hear the scroll wheel forever. Let's say 15:48. Yeah, this is going to be pretty darn impressive. 5 cents. 5 cents. 70 lot traded at 6 cents. Look where they were 3 minutes later. 19 cents on their way, and that was all at 15.50. Watch what happens. There they go, 25 cents, 24 cents, and they ended up closing. And remember, they go after the QQQ's different. Look where they went, 90 cents. Unbelievable in here. It's unbelievable. Don't forget, the QQQ trades after the close. So it trades till 15. So they went from 5 cents to 80 cents. That's a pretty good percentage move. Moral of the story, if you want the most bang for your buck, you take the overall indexes and you buy some cheap puts. So I hope this makes sense. Basically what I do is when I see those type of ledges, number one, I want to trade the indexes because it's just easier. Number two, I try to price the high-priced stocks within that index. And the third thing I do is I find the stocks that are slightly above their strike prices and try to buy cheap puts. So I hope this helps. Everybody have a great New Year's, and I'm very excited about the site coming online next week. Take care.